if you're entering before price taps into your real point of interest, you're not trading, you're just providing liquidity for the big players. Let me explain. Here's what I mean. Sometimes price is approaching your higher time frame point of interest, your demand zone, right? It could be an extreme or decisional. But instead of touching it, it creates a new liquidity cycle and a new market structure cycle early. Now, most traders see this and think, okay, cool, this is valid, because when we come down here, I'm going to get on the mitigation and at least hope to get a break even when we break above here. Because you know that the cycle moves like this. We have a low taken, we break above, we come back down, mitigate and make the next high, the expansion, right? So we get the break even here. However, in this one here, the demand is flawed. The reason why it's flawed is because the whole thing was a smart money engineered liquidity. Why? Because buyers here, they had the narrative right, but they didn't have the point where it was going to happen right. So they got trapped out as early buyers. And then sellers here, they're just seeing a new liquidity cycle and a new market structure cycle and they're looking to get in here. They're also getting trapped. This is what we call an inducement, because why? Buyers wanted to get in, they got violated. Now they flip bearish. Flip bearish, they also get violated. And then now they're bullish and expecting price to come to this point here, which is the demand that led to this break here. But price doesn't do that. It uses this supply as demand, and hence why break and retest sometimes work if you have this in place. It's funny because after I finished this video, I've gone on my charts and I've seen the same thing happen. Look, new liquidity cycle for buyers. Breaking this point here. New liquidity cycle, new market structure cycle. What happens? We haven't tapped into the point of interest yet. What do? We come all the way down. Early buyers get taken out. Sellers are now looking to sell at this point here. What happens? Price goes all the way up, breaking it. You see how it breaks it? We get a little bit of reaction there, but we don't move. Then we violate. And then what happens? We mitigate on this point here. Taking out this point as liquidity and we fuel it and we're going up. This is literally right now. Listen, if you want to stop providing liquidity for the big players and you want to be part of the big players, just remember this. This one thing saved me, even though it still gets me sometimes because I forget it. But listen to this. In order for price to go up, it first has to come down first. And in order for price to go down, it first has to come up first. So in a bullish idea, when you're waiting for your point of interest to be tapped into, remember, price has to come down first before it goes up. And coming down, we might create a new liquidity cycle and a new market structure cycle. It doesn't mean you're bearish. It doesn't mean getting into that because you see a new liquidity cycle and a new market structure cycle. Don't get in.